Good evening, everyone. Welcome to the channel. Before I begin, here are my disclaimers. Today I am going to give you an update about Avichina Industry and Technology Company Limited Annual Report. Avichina Industry and Technology Company Limited offers a diverse range of businesses and services across various industries. At the core of its operations are the development, manufacture, and sale of civil aviation and defense products. The company's product portfolio includes helicopters, trainer and general-purpose aircrafts, regional jets, and aviation ancillary system products such as connectors, mechanical electronics, avionics products, and their accessories. In addition to these products, Avichina also provides component products used in various fields including aviation, aerospace, military communications, data transmission, new energy vehicles, rail transportation, consumer electronics, industry, energy, medical care, intelligent equipment, and other civilian manufacturing areas. These components include optical and electrical interconnection components, cable assemblies, system interconnection equipment, fluid devices, and equipment. The company also offers avionic systems and equipment for military aircraft, including avionic and flight control systems. Furthermore, Avichina provides various aviation-related services such as aircraft power systems, fire prevention systems, environmental control systems, engine ignition systems, and accessories. Its engineering services include planning, design, consultation, construction, and operation services. In summary, Avichina Industry and Technology Company Limited's businesses and services encompass a wide range of products and solutions for the aviation, defense, and civilian industries, making it a significant player in its sector. Avichina Industry and Technology Company Limited maintains a market capitalization of $28 billion, broadly in line with the industry peer group. Avichina Industry and Technology Company Limited trades at a lower price-to-earnings ratio of 14 times and a higher price-to-book ratio of 0.71 times relative within the industry. This shows that investors are pessimistic in the industry in general, and we should dive deeper on the reason. Additionally, the stock appears attractively priced, even though it is trading at a higher price-to-book value than it appears. We will need to evaluate if the business earnings is sustainable and if the assets are valuated rationally. Overall, we need to identify if this makes a good investment on the long term, or is it going to be an extended period of low valuation or a value trap, and if it would be better to be investing in its peers than Avichina Industry and Technology Company Limited itself. The leverage on the balance sheet appears elevated, with liabilities of 52% of total assets. This raises some concern, and we should examine the industry and nature of the business to determine whether they justify the elevated leverage. Liabilities have increased, while assets and equity have failed to keep pace or declined. This suggests the business is not growing and may be in decline, making it a highly unattractive investment from a risk perspective. Shareholder equity has expanded consistently over the past 5 years, with growth supported by rising operating income. This suggests the company is profitable and financially sustainable. The share count has increased over the past 5 years, while revenue has continued to grow. This suggests the business may rely on shareholder dilution to fund expansion. Investors should closely monitor whether growth can eventually be sustained without dilution. The company have a dividend yield of 2.59%. The income statement shows that the company have been growing its revenue annually and the operating income have been increasing. This shows that the business model works and the business is expanding. The company comfortably covers its interest expenses through operating income and maintains a strong cash position relative to current liabilities. Additionally, special charges appear non-recurring, suggesting high earnings quality and strong financial resilience. The primary drivers of revenue growth or decline are multifaceted, reflecting the complexities of a diversified business entity. On the growth side, steady development across various businesses has contributed significantly to revenue expansion. Fee and commission income has seen a notable increase of 10.3%, while aviation ancillary system products have grown by 2.84%. The aviation engineering services segment has also experienced substantial growth, with an increase of 43.8%. Furthermore, the company's subsidiaries, JONHON and AVIC Airborne, have contributed to revenue growth. Additionally, increased sales of AC-series helicopters, growing demand for low-altitude economy applications, and expansion into international markets have all played a role in driving revenue upwards. On the other hand, several factors have led to revenue decline. A decrease of RMB 422 million, or 19.3% compared to the previous year, is a significant concern. The aviation engineering services business has seen a substantial decline, with losses amounting to minus 142.94 million. Additionally, expenses on compensation, damages, and fines have increased significantly. The company's net profit attributable to the owners of the parent company has also declined by 19.3%. A year-on-year decrease in interest income driven by decreased deposit interest rates and average existing funds is another factor contributing to revenue decline. Changes in product structure and a decrease in research and development investment have also had a negative impact on revenue. The net income and profit margins of the company experienced a decline in 2025 compared to the previous year. The net income decreased by 15.6% from RMB 5 billion, 754 million, 450,601 in 2024 to RMB 4 billion, 842 million, 836,326 in 2025. This decrease is also reflected in the net profit margin, which dropped from 8.3% in 2024 to 7.1% in 2025. The operating profit margin also saw a significant decline of 11.17%, decreasing from 99.33% to 88.16%. The reasons behind this decrease are attributed to several factors. Firstly, the year-on-year increase in revenue of aviation ancillary system products may have led to increased costs and expenses, contributing to the decline in net income and profit margins. Additionally, a change in product structure is also cited as a reason for the decrease. This implies that the company's shift towards new or different products may not be yielding the expected results, leading to lower profitability. Overall, these changes indicate a need for the company to reassess its strategies and adjust its operations to improve its financial performance. The company's debt level and interest expenses have undergone significant changes over the past year. While there are varying reports on the total debt level, one consistent trend is that it has increased overall. On page 34, it is noted that total borrowings rose by RMB 10,687,107.72% from 2024 to 2025. Additionally, on page 35, it is reported that the debt level increased by RMB 1,008 million during the same period. However, when examining interest expenses, a different picture emerges. According to page 2, there was a slight decrease in interest expense from RMB 424 million, 127,673 in 2024 to RMB 417 million, 990,885 in 2025. This trend is also reflected on page 13, where it is noted that interest expenses slightly increased from RMB 429 million, 442,223 in 2024 to RMB 430 million, 55,985 in 2025. In summary, while the company's debt level has increased overall, there are varying reports on the extent of this increase. In contrast, interest expenses have shown a slight decrease over the past year. The performance of various segments and regions within the company has been analyzed, revealing both positive and negative trends. On a more encouraging note, the aviation ancillary system and related business has shown exceptional growth, accounting for approximately 74.85% of total employees. This indicates a strong presence in this area. However, other segments have struggled to keep pace. The aviation entire aircraft business has underperformed significantly, with only 21.8% of employees contributing to it. Furthermore, the aviation engineering services business and others have also lagged behind, comprising just 3.35% of total employees. These results suggest that there is room for improvement in these areas. Management is emphasizing a forward-thinking approach to drive the company's growth and sustainability. The dual carbon strategy will be at the forefront, aiming to achieve sustainable development while reducing environmental impact. The company's long-term vision is to become a world-class aviation high-tech industry group, characterized by product excellence, prestigious brands, leading innovation, and modern governance. To achieve this, management has outlined 4 key strategies that will guide the company's direction. Firstly, the company will focus on strengthening its core functions and enhancing competitiveness to stay ahead in the market. Secondly, it aims to build a low-altitude economy industrial ecosystem, which will create new opportunities for growth and development. Thirdly, the company will accelerate the transformation of scientific and technological achievements into practical applications, driving innovation and progress. Lastly, management is committed to enhancing the quality and efficiency of helicopter industry development, ensuring that the company remains at the forefront of its sector. These strategies demonstrate a clear commitment to innovation, sustainability, and growth, positioning the company for long-term success. There are no notable acquisitions or divestitures to report in this period. The company has chosen not to engage in any significant transactions that would involve the purchase of new assets or businesses or the sale of existing ones. This decision suggests a focus on internal growth and development rather than external expansion through mergers and acquisitions. Based on the extracted summary, it is clear that the company has a history of paying out dividends to its shareholders. This suggests that the company has been profitable and has generated sufficient cash flow to distribute some of its earnings back to its investors. The confirmation of dividend payments can be found in two separate locations within the report. Page 18 explicitly states the company has paid dividends, while page 39 provides a concise answer, stating dividends. Yes, this dual confirmation reinforces the notion that the company has indeed paid out dividends. That concludes the financial summary for Avichina Industry and Technology Company Limited. Feel free to comment below, and I will be happy to answer them when possible.